Hello everyone. Today I am going to provide you with an overview of MCX FNO natural gas outlook from PhillipCapital India. Here I will like to go with an overview first about the view which we have shared last week. We will discuss how natural gas has reacted in last week as per our view, what strategy we have initiated, how it panned out, and for the coming week, what we have an outlook over natural gas and what can be looked as per the levels and the technicals in natural gas for this week. So last week, 18th of July, we have published a report where we have mentioned that the bias is range. Last week, last week, that is on 16th of July, the counter has ended on a weekly note at 555.60 levels, as we can see here on the charts. So initially for the first 3 weeks after 10th of June 22, natural gas slipped down from the highs of 750 to almost 425, and we had the target of around 400 in the best case scenario. And since last couple of weeks, we have been mentioning that natural gas has entered into an oversold zone after such a sharp fall, which was in line with our view. Since June we have been mentioning that natural gas is trading in overbought zone and it should witness some kind of decent correction. Gradually we have mentioned and given the target of 400 mark. So from those 425 odd levels, natural gas witnessed a sharp bounce back. And in last 3 weeks, natural gas has gained from the lows of 425 to the highs of 675. Last week the closing was at around 18.75% up at 674 levels. So the outlook which we have shared for 17th to 22nd of July as per our write-up was that going forward for the coming week, technically around 600 levels, the counter can witness fresh round of weakness. Our view was that initially this counter should find a hurdle at around 600 mark, and from those levels it can reattempt to test the support levels of 500 480 on the lower end. So we have mentioned that one can look for some kind of contra trading shorts around 600 mark, 600 to 620 levels with a stop over and above that. So last week the momentum was very fast. We have seen that because of the geopolitical factors and the triggers, natural gas once again witnessed a sharp bounce back from the lows of 425 to the highs of 675 in just a matter of 3 weeks. So last week from 565, it made a high of 674, nullifying our view that there can be a kind of selling pressure at around 600 to 620 odd levels. So the view which was sell on rise towards 600 to 620 with a stop over and above that has negated, and the counter formed a strong bullish candle on a weekly time frame once again, ending up 18%. So that was something extraordinary as for the technicals. But the view which we have carried initially at the start of this week was that upside is capped at around 600 mark. And in line with that view, we have initiated a covered bearish strategy, where as on 18th of July, we have bought natural gas 22nd July 580 put, and we have sold 500 put in the ratio 1:2. Since we were sure that the upside is capped, but the momentum is still strong. So we have initiated this bearish strategy with 1:2 risk reward, giving a maximum dent of 27,500 rupees per lot. And this was a very short-term strategy because we have initiated this strategy on 18th of July with a view till 22nd of July expiry. So on 22nd of July, the counter ended well above 650 odd levels. So this strategy was taken for a toss, and we have booked a loss of around 27,500 per lot as on 22nd of July. Now for the coming week, what we had an outlook, as we can see here on the charts. Earlier we were expecting some kind of resistance at around 600 mark. There we have seen that on daily basis, on the daily charts, it has respected us slightly and giving a respect to 600 levels. And we can see that as on daily charts, it made a high of 600 before slipping down to 585, but the momentum was very strong, and thereafter it resumed its up move and ended last week almost at its highs. Now, if we see the daily charts, we can find that the counter has still strong resistance zone between 675 to 700 mark initially, followed by its previous highs of around 745, 750 levels. So technically, as per the ideal case scenario, what we can expect is that natural gas should find resistance at around 675, 700 levels, followed by at around 740 levels, and it should retest the supports of 625 and 600 levels once again. So the bias remains upside capped as per the technicals and the price study, and we are recommending that any kind of move towards 675 to 700 levels can be looked for some kind of contra trading short positions with strict stop losses. Because this counter is a high volatile counter, high beta counter, so one should not initially look for some kind of aggressive shorts, but a calculative bearish strategy with predefined risk reward ratio can be looked at around 700 levels in natural gas, expecting the counter to retest the support of 600 levels on the lower end on a conservative node basis. So initially, one can expect that 600 to 700 can be the crucial level and trading zone. But if we have to talk about for the week as a whole, then we come to the conclusion that 550 and 750 can be the major trading band. Move towards this level on the higher end can be looked for contra trading shorts strategies, while dip towards 550 odd levels positionally can be looked for some kind of bullish strategy once again. So a consolidation and a high volatility drama can once again can be expected, backed by the geopolitical triggers, where we are not very certain what will be the outcome. But as per the technical studies and the levels, we can, as a disciplined trader, we can look for these levels to initiate our strategies at the crucial levels of 700 on the higher end and on the lower end towards 600 and 550. That's all from my end. Thank you, viewers, for your precious time. If you find my content relevant, then kindly get in touch with us with your queries. Thank you very much.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.